Welcome everybody to today's 1 million by 1 million public roundtable for entrepreneurs. And as I've said before, this is an initiative that is open to everybody all around the world. We are a completely inclusive program, and our goal is to help 1 million entrepreneurs reach $1 million in annual revenue, thereby building $1 trillion in global GDP and 10 million jobs. That is the vision of the program. And the only way this vision can be achieved is if you, the entrepreneurs, become violently successful. So our success is entirely predicated on your success, and we do everything we can to help you become successful and help you navigate your way through this process. Now, I don't want to, even for a minute, say that entrepreneurship is easy. Entrepreneurship is not easy. Entrepreneurship is not for everybody. It's an incredibly difficult exercise. It takes tremendous resilience. It takes tremendous patience, courage, all sorts of things that are actually not in abundant supply in the world, which is why the number of entrepreneurs around the world, the number of successful entrepreneurs are relatively lower. The part of the equation, though, that we are trying to solve here is a lot of entrepreneurs fail because they just don't have access to the knowledge and the mechanics of being successful in an entrepreneurial venture. There are lots of mechanics in an entrepreneurial venture. There are, things that we have learned because, especially where I live in Silicon Valley, this is a place where we have a tremendous amount of knowledge and historic, what I call tribal knowledge that is accumulated here. So if you're in Silicon Valley, you have lots of events, lots of, programming that's going on continuously, and you get knowledge imparted to you through this kind of ad hoc process of you meet people and you gather knowledge, or you go to an event, you gather knowledge. But what we are trying to do with 1 million by 1 million is really make this quote-unquote tribal knowledge largely accumulated in Silicon Valley, but we've gathered knowledge from other parts of the world as well, including India, including other parts of the United States, including Latin America, Europe, and we're trying to give you a very short, efficient way of accessing this knowledge completely virtually. And that is what the whole premise of the 1 million by 1 program is. So what you'll see today, is, if you haven't been here before, is I'm going to be working with some entrepreneurs, and then we're going to talk a bit about program, answer questions, do general Q&A. Entrepreneurs come and ask a lot of questions at these events. And these are free. These happen almost every week when I'm not traveling, and often I'm actually traveling and doing these sessions live in different parts of the world as well. So like, for instance, in March, we have 3 events with Israel and a series of events in India where I will be physically later half of March. So we're trying to really disseminate the knowledge and the expertise in a very broad way. Now, today's roundtable, if you want to live tweet this session, please use the hashtag 1M1M, and our Twitter handles are at 1M by 1M and at Sramana. And the at Sramana channel actually produces a couple of hundred microblogging messages a day, Twitter messages a day. And what we try to do there is basically offer bite-sized pieces of, again, knowledge. So you'll often see that we have a little bit of a, how to get a $20 million pre-money valuation, and then we'll refer you to a case study which talks about how to do that. We have a ton of that kind of content that flows through our Twitter channel. So it's a high-value channel to follow. So our first entrepreneur whom we're going to be working with today is Stephanie Sheridan. Stephanie, if you could unmute your line, tell us what you're working on, that would be great.
Hi, good morning. Can you hear me?
Yes, we can hear you.
Oh, fantastic. Thank you so much for the opportunity to speak with you online, Sramana. I really admire the work that you're doing, and I'm a trained economist, so I see the incredible value that you're adding to the global economy. That being said, I founded a L3C, which is a low-profit, limited liability company. It's a hybrid. It's called the Institute for Policy Analysis and Implementation, and that was founded in May of 2011. And it's very early stage. I am located in Washington, D.C., and there are 3 sections to the company. There's the membership side, the consumer products, and then B Corp investments. So I will go through the 3 different channels and subsequently on the following slide. So if we could go to the next slide.
Okay.
Okay, so the whole concept for the 3 lines of revenue and the 3 areas of focus is to address the transition into a carbon neutral lifestyle for consumers. And the first area of focus is on the U.S. market. I am very much a global citizen, and also believe that local is global. And so the act of engaging the U.S. consumer is a very important part of our mission, and will then lead to the U.S. catching up in regard to legislative activity on climate change. Mm-hmm. So the second area is the consumer products line, and this is the actual touch and see of carbon neutral goods. I do have a product background in development, and so there are a number of opportunities to explore that, both as example products and then the third side, which is the investment side. So helping companies that are engaged in producing carbon neutral goods and engaged in activities that reduce their overall supply chain footprint. These are majority female-owned companies, so it's 51%, and the concept of investment or equity is really to allow the companies to grow and succeed, supported by the membership base as well as the promotion of their products.
Stephanie, hold on for a second. Let me see if I got what you're trying to say.
Okay.
You are trying to do something from something that is a membership network of people who are carbon conscious. Is that it?
Yes, I mean that they are carbon conscious. I guess the issue is that a lot of people aren't carbon conscious. So, yes.
So how big is the market of people who are carbon conscious that you think are in your sweet spot?
Well, I mean, technically, the sweet spot that I'm focused on right now is the DC market, and it's engaging leadership here to commit to reduction in their carbon footprint by 35% in the first year.
How? What form does this take? What is the offering? What is the value?
Okay.
What is the
value
proposition?
Yeah. So the membership is an initiation of partnerships, essentially, to help consumers transition without a loss in quality of life. So the annual fee is $500, and that's based on 1% of U.S. annual average consumer expenditure. And so the services that are tied to that on a monthly basis include tools for people to transition. So that means the carbon footprint software, it means nutrition counseling, it means low carbon exercise, yoga. I'm partnered yoga studios here, and energy efficiency evaluations in the home.
Do you have any evidence that consumers are willing to pay $500 a year for this kind of stuff? Because I heard you say that the problem is that people are not carbon conscious. Now you're, for people to fork out $500 a year, they would not only need to be carbon conscious, they need to be deeply committed to being carbon conscious. What is the size of that market, and what is the evidence that people are willing to pay this money?
Well, the idea is actually to help aggregate the services that are being provided by other people in such a way that by membership and by commitment to the reduction, there is the value proposition, because the services separately are more expensive, right? So the idea is that it's hitting a number of different objectives around the concept of initiating toward a carbon neutral lifestyle.
Okay,
I don't know if that answers your question.
We'll move on, but I will leave you with my thought is that I'm deeply concerned about your assumption that people are willing to pay $500 a year to subscribe to something like this. People on the internet pay money for very little.
Right, yeah. I mean, I think that's why I'm focused on the DC market and my direct contact link and list. I've been here for 10 years. I went to grad school. I have an amazing network of people in the energy resource environment space and a number of U.S. Institutions here. So my real drive is to engage people at the level at which we're internalizing the fact that we're making policy on one side and not living it on the other, and doing it in such a way to help foster the growth of other companies that are also doing this activity.
Stephanie, I think part of what I'm hearing is that you're confusing your audience. The people whom you are expecting are going to pay $500 a year to subscribe to your services are consumers. And I am deeply skeptical about how to engage consumers to pay $500 a year to live a carbon neutral lifestyle or carbon efficient lifestyle.
Right. Well, that's exactly because most people aren't aware, especially in the U.S., of the fact that this is a rapidly growing market in Canada and other countries. So the idea is it's not about consuming less necessarily. It's how you consume and the efficiency with which you consume. And there's a big growth in this market. There's been a drop off. There was a lot of R&D done prior to the economic crisis. So especially, and in the carbon markets as well. So it's really about galvanizing that community. But again, my focus is really in Washington, D.C., although I do have a web presence. I guess I would say the test case for this, for the membership, is in Washington.
So how many consumers do you think you have access to who would be willing to pay $500 a year for this kind of a product?
Well, the goal is to engage 5,000. So I think that the initiative, you know, in order to have a real impact, needs to have those numbers. So that's the goal within the first year.
That may be the goal. Getting 5,000 people to pay $500 a year is an incredibly difficult task. I'm asking you, how are you going to find these people who are willing to do that? Where do you have any strategy of accessing enough people who are deeply carbon conscious and would be willing to fork out $500 a year?
Well, that's I guess my mode of understanding the concept is really, it's not about necessarily having to connect with the people that are deeply carbon conscious, because I don't think they're really in the economic demographic that is my target market. My target market is the people that are actually consuming the most goods and services, right? Because they're the ones who are, you know, active in this type of lifestyle that needs to transition. So I think just focusing on the traditional environmental crowd is not necessarily a good use of my time. What I want to do is be able to engage with the median consumer, which in the Washington, D.C. area is 90 to 120,000 median household income, in order to then lay the groundwork for more mainstream activity to be going on in this sector. So to answer your question more specifically, you're
setting yourself, changing consumer behavior is incredibly difficult.
Well, I'm not changing behavior. I'm just introducing new products and packaging them
but you're introducing new products for which this consumer base has no awareness, and you're expecting them to pay $500 a year.
Well, I think people do have awareness. I mean, I think people are very aware of nutrition counseling. They're aware of the carbon footprint calculator. They're aware of yoga. I mean, I'm partnering with organizations and companies here in Washington that are already active in these activities, and then I'm just leveraging their consumer base as well, and then coupling that through into membership.
Okay, I think we should move on and go to whatever other questions you have. I am deeply skeptical that people are going to pay $500 for something like this.
Yeah, I think if I would have put the specific offerings on, so for example, if you have a gym membership, you pay on a monthly basis. You know, if you have a nutrition coach, you pay on a monthly basis. If you get an energy assessment on your home, you pay that. So the idea is that it's service bundling, right? So if you think of those things separately, as a traditional consumer does, this is just aggregating those and putting them in a broader context. So you feel like you're part of something bigger than yourself. And
$500 covers a yoga studio membership?
It's one time a month individual session.
That's not that doesn't suffice for anyone who is actually interested in yoga, right? Once a month doesn't do anything.
Well, that's the idea. The target market is really for people who are executives who aren't into yoga. So the idea is that people who don't have the time to leave their offices, for them to actually have somebody that's helping them transition and helping them, make that change.
Stephanie, I would recommend that you do some absolutely core validation work with your target consumer base to see whether anybody would pay for this or not.
Oh, exactly, and that's what I said. I'm early stage on this, and so that's exactly what I'm engaged in right now, imminently.
Yeah, okay. All right, what else do you want to discuss?
So I guess the other angle is really the equity side in terms of investing time and energy into the companies that are also active in this space. And I mean, I think that the whole idea is to empower women's equity for sure. And so the B Corp movement here in this area is rather strong, and I'm very much supportive of it. So again, the partnerships that we're working on are helping further the production of goods that take into account for carbon footprint. So for example, within the food industry, juicing, we have a juice truck that somebody's buying, and then we're putting together the basic plan for them to grow, and then equity tied to their growth directly.
So the problem I have with all this is that there are too many ideas in here, and you will find out your first idea that you just discussed is going to be hard enough to build up without going into 3 other ideas.
Yeah, I know. The problem is that I've worked in membership organizations, and they constantly need to expand their lines of revenue. So I feel very strong.
I mean, the lines of revenue, you have to build a basic line of revenue first, and you'll see how to that. You can't even think about expansion right now. It's going to take you a long time. The numbers that you've set for yourself, 5,000 units of $500 per year kind of membership, it's going to take you a long time to penetrate that market. if you can penetrate that market at all, I'm not yet convinced that that market validates. You're going to have to validate that assumption. And even if it does, getting to those numbers is going to take you a long time. So right now, I would say put these other ideas of women-owned equity investments and all this, I would just put these on the shelf. Don't defocus yourself, and don't dilute your energy and effort away from your core business plan.
Right.
You can't do 3 businesses at once.
Right.
And you have a very limited amount of resources within which to be successful with a core idea. If you dilute your focus and dilute your resources, including your personal energy, it's not going to work. You see what I'm saying?
Right. I'm listening.
Right? So I would say all this kind of needs to go on the back burner or go on a attic shelf for the time being, and you focus on trying to validate your core idea, which already has significant issues. So
yes, yeah, I totally agree in terms of being focused, getting that built out, and that is my number one focus. So we're pretty excited about it. So we'll see what the market says.
All right. Good luck.
Thank you so much.
Zeph, you're next.
Yeah. Hi, everybody. My name is Zeph. Thanks for this opportunity. There's definitely some issues that I need to try and figure out, so I really value this opportunity to be able to discuss them with you. So my name is Zeph. We're based here in Southern California, which is in the greater Los Angeles area. At this point, we're just a little bit beyond the concept stage in this idea that we call BizDemi. The company's not even registered yet. So what we're building is a simulation platform that would target organizations that provide business training. The big difference that we aim to, or the difference that our simulation aims to make is that they're like a wiki. So every time the simulation gets used, knowledge gets added to the simulation platform. And in a sense, it becomes sort of peer-reviewed every time it's used. Also, we want to provide the ability for users to customize the simulation. So, for example, if you're working with a restaurant simulation, and when you first start out, you don't know anything about the restaurant business. You're just interested in it. So you work with the template simulation of a restaurant that we provide to you. But once you start getting familiar with some of the terms, some of the mechanisms of the restaurant, and then you can go back and then change it around. So, for example, our template might have 100 tables, whereas you think, well, that's too big. I just want to work with about 40 tables, and I want to see what happens when I work with just the 40 tables. So that's kind of the big difference between what we want to do with our simulation as opposed to what's available right now.
And Zeph, here's a question for you. These simulations that you're going to be creating, are they kind of custom simulations for specific corporate customers and their training needs?
Well, that's the idea. The concept that I want to use in the simulation is that it's mass customization. So essentially, we want to start with templates, and we're creating 2 interfaces. You have the user interface and the expert interface. So the user interface can access the simulation, kind of like in a game access, whereas the expert can enter it from the point of view of being able to change products, customers, and competitors. So we're not necessarily providing a full service in the sense that someone comes to us and says this is a simulation we need, and we kind of match that specification. We're actually saying to trainers that here's different templates, and you can go in and work through them with our help.
Okay, so if that's the assumption, then you have to pick areas and segments where these templates actually are effective. Do you have a sense of where these kinds of templates would be effective?
Yes, we're looking at the area of small business. So, the force for, if you like, business stories or business simulations that we want to start with are individual retail store, restaurant, light manufacturing, and creative design agency. So those are the 4
I don't
templates
think
that we
these
want
are
to sell.
at all good segments for what you're trying to do. I think
Excuse
these are segments for what you're trying to do. Nobody's
Sorry,
going to pay segments.
Sorry, excuse me. You cut out a bit. Did you say good or bad?
Bad. Very bad.
Bad. Okay. Okay. All right.
And the reason being, I don't think anybody will pay in those kinds of segments. People don't really pay for training much, especially not training technology. You need to go after a segment that is quite comfortable and quite knowledgeable about buying training technology and position your solution to the needs of that segment.
Okay. Well, one of I guess, and
So wait a minute. You have a slide here that says Fortune 1000 companies. You just told me.
That's what I was going to try and clarify. I think that this is part of my confusion really is how to target this, because just to give a little bit of background, I currently run a small business where we sell other people. So we're a distributor for other simulations. And we're selling to community colleges and universities. And the 4 business stories that I mentioned are sort of fairly successful in that type of audience. But what's coming across is that there's this other market, which is the ones that I've listed here, which are interested in this entrepreneurship skills. So they're not necessarily trying to turn their, I guess, employees into entrepreneurs, but they're interested in the skills that entrepreneurship training provides, and that's the reason for talking about these type of business stories. Now, obviously, we're quite open to changing the business stories around, but one of the thoughts was
look,
that
I asked you a question right up front. Are you expecting your customers to pay for you to develop these simulations, or are you building products yourselves? If you're going to do small business, small business is not going to pay you to custom design entrepreneurship training products for them.
Sure. Okay.
Larger companies might, academic institutions might, small businesses will definitely not.
Okay. Okay. So
There's a fallacy in that assumption.
Okay. Okay. I understand.
So if I think you kind of, from the point of view of business building, you're going to have to assume that somebody is going to pay for the development of the training material, and as a result, you have to go after a segment that is willing to pay you to custom design, custom build their training solutions based on your technology and your templates, and that automatically pushes you up the value chain into the, large enterprise, mid-sized enterprise category that have serious needs for training.
Okay. I guess one of the questions that, based on this slide is that to be fair, I am actually a little bit confused about exactly which audience to target as well, because, I'm aware that the education market.
To be confused about segmentation, of course.
Yeah, I feel the commercial market is going to be quite different to the education market. I'm fairly confident about what the education market might need because, I already worked from them. I have a background there.
But remember, again, education market is very unlikely to pay you money to develop custom training tools for them.
Sure.
Education market doesn't have a lot of money.
No, they don't. No, they don't. And
so
that's
you have to go where the money is. You have to follow the money trail.
Fair enough. Okay.
You can't design a product or a service for a segment that cannot afford it.
Yes, that's definitely a very valid point.
And then even within Fortune 1000, you're going to have to do a fairly extensive amount of segmentation to find where and how your offering actually can have an impact.
Right.
So academic conferences, if education is not your market, then academic conferences cannot be your customer acquisition strategy.
Right. Yeah, I mean, I guess this is my current acquisition strategy, really.
Where you're selling other people's simulation products, yes?
Currently, yes, yes. and then this is how I'm doing it.
So if you're selling other people's products, simulation products to academic institutions, then that's the strategy that you outline here is fine. And is that business going to continue when you do the other piece of the business, or is this going to go away?
No. I mean, there's challenges with this business, which is kind of what you're saying. So what's coming across is that the lecturers and the professors are excited about this technology and they want to use it, but there are two challenges with them. One is money. But the second one, actually, I think, which is slightly more important, is that they're afraid of putting in the effort to learn new technology. But the students seem to be really excited. So it kind of, it kind of seems like there's a huge demand from almost the individual student, but the professor is kind of the roadblock. So one of the ideas I was thinking about, especially with the education market, was to try and come up with a model where it becomes like a textbook referral. So the professor doesn't really pay. So the education institute doesn't actually pay.
If you go that route, you're going to have to finance the product development and marketing costs.
Right.
And that is a very expensive effort.
Okay. Whereas obviously with the commercial company, we could actually make some money.
Yes.
And kind of find right. Okay.
Well, that's the assumption. You are going to have to test. You're going to have to go talk to the corporations and find out where where there is possibility, and that's basically those are some some of the validation work that you're going to have to do.
Right. Okay. Okay.
So and frankly, I think the whole customer acquisition strategy will come after you've decided on the segments. The customer acquisition strategy is highly segment specific. What customer acquisition strategy works if you're marketing and selling to small businesses is not the same customer acquisition strategy that would work if you're working with enterprise customers.
Right.
So it's the competitive landscape is different, the channels are different, the customer acquisition strategy is different. The marketing is different. Everything, you're going to have to zero in on how you position this business and then take it from there.
Okay.
Okay?
Okay. Yeah.
All right.
Well, I guess you could ignore the last two slides because we've kind of addressed some of the main queries that I already had. So.
Okay. And you had some questions about incubators. Why don't we talk about your questions about incubators, and then I'll do the segment on 1 million by 1 million. Do you want to ask me questions?
Yeah, I guess I've been chatting with Irina on Skype, and I mentioned to her that we kind of qualified for an incubator here, and and she her reaction was a little bit strong. And then she kind of said, well, I'll wait for Sramana to actually address the question. So I just wanted to, maybe delve a little bit deeper, trying to understand what your position was, and I guess.
Position with incubators is we work with lots of incubators. We work in a supplemental mode with incubators. I think if you are in a situation where you may have seen our Y Combinator versus 1M by 1M video. And by the way, all of you who are interested in our, how we work with incubators may want to look at some of our Skype videos. Irina, maybe you can put the link in the public chat, both the Y Combinator versus 1M 1M video and how to do regional economic development using 1 million by 1 million video. These are all in our YouTube video channel. Essentially, what our perspective on incubators is that we do not consider incubators competitive. We are a virtual program. Will never be a physical program. Will always remain a virtual program. And incubators essentially provide the local, physical support. In some cases, that is co-working space with other entrepreneurs and giving you a peer group, local peer group, a community to work with, and so forth. In some cases, it could be that incubators would invest in you, and that is if they're interested in investing in you, that is something that you should take a little bit like you should evaluate what are the terms under which you would get that investment. And our position is you should have a good understanding of what business you're getting into before you sign off a large chunk of equity, and it could very well be that your business is not so much an equity type of business where you're going to, when you have outside investors, the expectation is that you're going to sell the company and make money off the exit for the investors, and unless they're willing to accept dividends. So it's a complex set of decisions that you have to make, and we prefer that you kind of go through the 1 million by 1 million curriculum and understand the pros and cons of taking investment, not taking investments. What are the different types of return on investment principles? What are the equity structures that you're looking for? All of this, there's a variety of different decisions that you need to make based on what your business really is. And without understanding those decisions, if you blindly walk into an incubator and they are willing to accept you and you sign off a large chunk of your equity, we are not so much in favor of that.
Right. Okay.
But in principle, we are completely comfortable working with companies that are in other incubators. We even have incubators offering 1 million by 1 million scholarships to their incubating companies, and to some extent the level of and the kinds of value that we provide, a lot of incubators in different parts of the world do not have access to this kind of material. They don't have this kind of network. They do not have this kind of curriculum material, the case studies, and just the knowledge of what we have here in Silicon Valley is something that most incubators don't have access to. So putting us in, just like you said, it's like a textbook referral. 1 million by 1 million is like you could think of it as a textbook referral or an app that you plug in. If the incubator is a smartphone, you could think of 1 million by 1 million as an app that gets installed on the smartphone.
That's a very good metaphor. Okay.
Right? So it just makes the incubator more powerful.
Sure.
Or you could think of it as the Intel Inside campaign. If the incubator is a computer, 1 million by 1 million is a chip that's inside that computer that makes the computer run more powerfully.
Sure. I mean, I do actually understand your argument because, the point that we have to make the decision whether to join the incubator or not, like you've already seen, we're dealing with a lot of other issues. So trying to understand how much that equity is worth is almost impossible.
That's right. You cannot value the stage at which your business is today. You have a very limited understanding of what is the structure of this business, what form this business is going to take. So how the hell do you value this business today from an equity point of view? Yeah,
well, I guess when an incubator offers you that equity and money, you almost feel like, hey, this is validation of some kind, and you kind of take it up because it's a bit of a mental relief, to be honest, more than anything else. And so I've definitely not put in any amount of thought, and I think your argument does make me pause and start to want to think that way.
Right, and I think when you have let's say you join 1 million by 1 million and spend 3 months really understanding your business and zeroing in on what your business is, then you take that back to the incubator and they're willing to invest in you and you can negotiate a deal and so on and so forth. I think that's a point where you have more more reasonable business terms to discuss. Right now it's a blank sheet of paper.
Okay, I get that. Yeah.
All right, so I will spend a few minutes talking. Does anybody have any questions in everything that we have discussed so far? If you have any questions, please feel free to use the public chat to ask your questions or make your comments. And I'm going to spend the next segment talking about the specifics of 1 million by 1 million for those of you who are not familiar with what we do and how we deliver the value we deliver. Before we go in there, though, I'd like to request you to expose 10 serious entrepreneurs in your network to 1M1M if you like what we are doing. we're putting in an immense amount of energy and effort and resources into building 1 million by 1 million, and it's a lot of that resources available for free, and the rest of it for a very low price point. So it's a tremendous resource that needs to be exposed to more entrepreneurs around the world so that they can just take advantage of it in a on a systematic manner. So the website of 1M1M is 1m1m.sramanamitra.com. Here are some of the resources that you can start accessing. The blog series is completely free. So you can access our entire body of case studies and trend analysis, all sorts of things on the blog if you just follow the blog and dig around in the blog. And then the next layer of resources is the Entrepreneur Journeys book series, where we use case studies to make specific points and to explain specific points to you. And let's see, the first volume of Entrepreneur Journeys has, for instance, 12 case studies. The second volume focuses on bootstrapping, weapon of mass reconstruction, and the third volume is positioning, how to test, validate, and bring your idea to market. This positioning and bootstrapping are two absolute cornerstone philosophies of the 1 million by 1 million program. So anytime you come to me and talk to me about a business plan that is going to require a lot of capital out of the gate, I will tell you that don't go there. Let's build a strategy that allows you to create validation and create value and hence create valuation in your company first before you go out and seek capital. And this is something that is a tried and true philosophy, and you'll find lots of case studies from entrepreneurs, because the other side of the equation, unless you're a highly experienced entrepreneur who has a track record with investors and who has delivered 5x, 10x returns on previous ventures, people don't really fund concepts. Investors don't really fund concepts. So we try to prevent your getting discouraged and getting rejected over and over again without doing validation work. All right. So the blog, by the way, is at sramanamitra.com. And then the next free resource also is these free roundtables. We do these roundtables almost every week, and we are on our 116th roundtable. We are approaching probably 10,000 people who have attended the sessions at this point. I've coached over 500 entrepreneurs over the last few years. Beyond the public roundtables, these free public roundtables, we have the premium program, the 1 million by 1 million premium program that covers extensive methodology guidance. We have a very comprehensive curriculum. We do business development, introduce you to customers, channel partners. We do strategy consulting, which is a private version of these kinds of roundtables where you get to come and discuss your issues with me. And the difference between these public roundtables and the private roundtables is that you have the benefit of the curriculum to supplement the strategy consulting. So let's say you come and ask me a question about customer acquisition. Most likely I will tell you, you first go study the customer acquisition module of the curriculum and then come and discuss with me, because we are going to have a much higher level conversation. So let's say you spend a couple of days, 3 days, really deeply understanding the customer acquisition module of the curriculum, and then we're going to have a much more sophisticated discussion on your particular customer acquisition strategy. In addition, within the curriculum, we have discussion areas. So you can use those discussion areas to continuously enhance your curriculum, your understanding of the curriculum and the material, and hone your strategy, so that by the time you actually come and discuss something with us, you're going to be in a much more mature stage of strategic planning. Now, of course, we also help with financing. We have a large roster of financiers who see, quote unquote, in the parlance of venture capital, who see 1 million by 1 million deals effectively. So if we send them a deal, they know that this is a business that has been validated up to a certain point, and they will look at the deal as such and will definitely pay attention to it. So what that does is it cuts a lot of the cycle of what it takes for you to get in front of investors. So we have, when we do financing rounds, depend on where you are raising money, what part of the world, we have had situations where within 1 hour, an entrepreneur has received 35 introductions to investors, and by the end of the day have heard back from a dozen investors, and meetings get set up. Now that is the credibility that we have been able to establish in the investment world. The corollary of that story, though, is that we have to be very, very careful in whom we send to these investors. If we send people who are unprepared and who have not done the validation work and the strategy work that would give them credibility with these investors, then our credibility also gets hurt. So we try to prepare you as much as possible to go to these investors and significantly enhance your chances. I can't say that we can prepare you to a point where you would 100% get finance. That's not the, I would not make that claim, because that is just mathematically impossible. People have preferences, people have, you know, sometimes people have competitive businesses in their portfolio. Sometimes they have biases against certain markets. Right now in Silicon Valley, people are really interested in business to consumer. Business to business entrepreneurs are having a harder time just because the bias of the market is more in the B2C direction. When we went through the dot-com meltdown in the end of 99, early 2000 onwards period, all the way to the mid-2000 decade, the reverse was happening. B2C deals were completely out of favor. Business-to-business deals is where the emphasis was, or the interest was. So pendulum swings, you know, all over the place. Different geographies have different preferences, different comfort zones, and so on and so forth. So you're going to have to play this high, you know, the very low probability game of financing. 99%, over 99% of businesses that go out to seek financing actually get rejected. So, we really focus you on business strategy and execution, so that the chances of you going out of business is lower. You're going to, we teach you on what you need to do to be successful, and that's pretty much the emphasis of the program. We keep telling you that our program is focused on business strategy and execution, irrespective of financing. So we are okay, even if you do not raise financing, if you just build your business and defer raising financing or never raise financing at all, we don't have a problem with that. And this is one of the places where we differ from an incubator like Y Combinator, for instance. Y Combinator will only work with you if you're a financeable company, because their model is they will put in money in your company and they will raise follow-on rounds of financing, and it's basically a venture capital kind of model. And that applies to a very small set of companies. So Y Combinator gets, I think, about 50,000, 60,000 applications a year, and they accept something like 100 to 150 a year. So you can imagine the ratio is, the probability of getting accepted is very low. So in any case, if you're interested in the 1 million by 1 million versus Y Combinator issue, you can take a look at this video that Irina has put on the in the public chat, because it really articulates some of the key issues that Y Combinator and other incubators have versus 1M1M. And these are, Y Combinator is a very good incubator. There are several other very good incubators that follow similar models. We are trying to do something different. And by the way, you can work with us and then go to Y Combinator. That's fine too. That just will prepare you better for any kind of situation, because you've done a lot of the groundwork that would qualify you, would prepare you better for having these discussions or making these pitches. So one of the first starting points for our entrepreneurs is the self-assessment. If you go to the 1M1M site, there is a self-assessment. And we want you to really deeply and honestly evaluate where you are today with your business. And where you have gaps, every entrepreneur has gaps. Every entrepreneur has gaps, and they have to fill those gaps. Even the most experienced entrepreneurs have gaps. You know, because we operate in a highly technology-driven world where things are changing all the time. There's lots of things happening, lots of new things coming into place, and we are always learning. And the thing that we're trying to do here is short-circuit that process of learning for you and make it efficient. So, my recommendation is definitely do the 1M1M self-assessment. And if you are a premium member, you have the benefit of the curriculum modules that go with each of those assessment pieces. Now, you can also find a lot more information about what we offer in the, if you go to the top black bar up on the right corner, premium program and FAQ are two good places to look, what to expect from the premium program and the frequently asked questions pages. There's also a list of videos that answer a lot of frequently asked questions. You can look at those too. As far as the methodology is concerned, we really underscored this lean, capital efficient, bootstrap startup principle. It's very, very central to our methodology. We do have a core curriculum and an elective curriculum. In the core curriculum, we cover bootstrapping, positioning, market sizing, customer validation, financing, customer acquisition, and team building. In the electives, we deal with the various trends of our industry where we see a lot of ventures happening. So Web 3.0 in e-commerce is a very important trend, right? By 2020, we're going to have 5 billion people on the internet. So the trend of building businesses on the web is a very significant trend. And you'll see that come up over and over again. So we have a dedicated module, elective module on that. Cloud computing and business solutions, outsourcing and consulting, gaming, online education, healthcare IT, mobile and social apps. These are all incredibly, incredibly popular areas where ventures are happening. And so we have created elective modules for each of those categories. Now our curriculum format is case studies of several hundred successful entrepreneurs and video lectures synthesizing those case studies. So almost everywhere you have video lectures explaining to you the principles of each of those topics that I talked about, and there are sub-modules in each of those modules. And we supply case studies that illustrate specific points from successful entrepreneurs, and that's very powerful. Most of the case studies are entrepreneurs who've built at least a $5 million business, more often 10 million, 20 million, 50 million, $100 million businesses. So you have basically masters teaching you this curriculum. You know, the beauty of the program is that all these hundreds of entrepreneurs have taken the time to sit down with us and share their knowledge, their lessons from the trenches so that you can learn from them. So it's not just, you know, the 1 million by 1 million team teaching you this curriculum. It's hundreds of entrepreneurs, successful entrepreneurs around the world, especially from Silicon Valley, who are sharing their knowledge and their expertise with you. It's a very, very powerful curriculum. We do a lot of business development work, so we'll introduce where we have contacts. If we have contacts, we will introduce you to them. So, so there's a lot of business that happens through the 1 million by 1 million network, both intra-network, you know, our entrepreneurs are doing business with one another within the network, and we are introducing them to other partners, channel partners, customers, and so on and so forth. We also, I want to share with you a story about an entrepreneur who pitched at one of these public roundtables. And then he wrote to me this message on my Facebook page, and he says, if you read this, it's a little small, but thanks, Sramana. I wish I had an opportunity like this in 2007, 2008, immediately after funding, so that we could have found a way to validate Mango DVM's pricing model before exhausting our money. So this entrepreneur went to market and spent a lot of that money without validating his assumptions. And this is one of the classic things that happens in entrepreneurship. One of the reasons we have such a high rate of infant entrepreneur mortality is because entrepreneurs do not validate their assumptions and they run out of their resources without validation. And if you do that, you would never be able to raise another round of financing. So the moral of the story is that please follow the methodology and save yourself this kind of grief. We've talked actually already extensively about incubators. MAD is just one of the incubators we work with in Malaysia, but we have incubators all over the US, in India, and different parts of the world. So we can work with incubators pretty much anywhere in the world. So if there's an incubator in your community that you want to connect with 1 million by 1 million, please introduce them to Irina, and she will get on the phone or Skype with them and orient them and bring them into the program. We also have an affiliate program. We pay 10% affiliate commission to people who bring us premium members and entrepreneurs. We have 4 more public roundtables coming up, February 23rd, March 1st, March 8th, and March 15th. And both March 8th and March 15th, I believe, are roundtables where we are partnering with Israeli partners, I think. Maureen can tell you more about that. And then after that, I'm going to be in India for a couple of weeks and doing roundtables in person in some of the Indian cities. Pune has a chunk of events, and Bangalore is going to have a chunk of events, and there's going to be an event in Calcutta. So if you follow our blog, we will keep you appraised of what's going on in terms of upcoming events. But at any rate, you have these 4 roundtables coming up, so please register if you want to pitch at one of them. The final point I want to make is for those of you who are interested in leveraging India. Vision India 2020 is my 5th book, and it has $45 billion business ideas. It's a business fiction that is set in 2020. As such, it's a futuristic retrospective, and it is a book that basically traces the process of building $45 billion business ideas that takes advantage of India, either India as a market or India as a production backend, whichever way you look at it. It takes advantage of India's strategic strengths. And these business ideas are available for you to, borrow, steal, morph, whatever you want to do with them and build on. Because it's not possible, humanly possible for me to build $45 billion businesses, so I'm working on 1 million by 1 million. We have a module in 1 million by 1 million to focus on Vision India 2020 ideas, and you're most welcome to take any of them and implement them, and we will help you do so. All right? So that is all I have to say about 1M1M, and my public chat is open. If any of you have any questions, I will be very happy to answer those questions. Today you're talking about Pinterest. Well, there is a B2C bubble going on right now, and some of it you see even in the companies that have gone public lately are losing a lot of money. In 2011, Zynga lost $1 billion, and it remains to be seen whether their business is sustainable. And that's true about Groupon. That's true about a bunch of different companies that have gone through this B2C bubble over the last few years. But this is how the tech market operates, It goes through bubbles and busts. Anybody else in public chat who want to ask a question or make a comment? Is there any other points that you want me to address? No? You're very welcome, Zeph. I hope you're going to join our program and would be able to help you a lot more. And if you haven't pitched yet at one of these public roundtables and you're working on a business, please come and pitch. We would very much like to have a look at what you're working on and add value to your efforts. Sudhi, are you talking about the angel list email? Okay. Yes, your question was about angel lists, and I think I pointed you to a specific module we have which explains how 1 million by 1 million works with angel lists. Again, we supplement their efforts, we complement their efforts, and we have no problems with working with angel lists either. But again, some principles apply, because again, we don't want you to go into angel lists and bounce around getting rejected, because again, there are requirements to get funded by angel investors as well. Pranav, thank you for your comments. It was insightful, the interaction you say, and that's nice to hear. Okay, looks like we're done for today, and I hope to see some of you next week. And if you're a premium member or about to become a premium member, I'll see you at the next private roundtable on Wednesday. Bye-bye, everybody. Thank you for coming.